welcome to Follow the Money. I'm China Barachina. Let us explore the tools and insights you need to jumpstart your financial journey. Today we're diving into a question every Filipino investor needs to ask. What does it really cost to invest? Because behind every promise of big returns and easy gains, there's always a price. Sometimes hidden, sometimes obvious, but always there. Is it the taxes we pay, the fees we barely notice, or the silent costs that over time could grow so large they become a whole new investment we never planned for? Joining me today is Christian D, economic policy advocate and protégé of Congressman Joey Salceda. Together we'll shine a light on the true cost, the taxes changes, and the wisdom every investor needs to follow the money wisely. So stay with us because it's not just about where your money goes, it's about where it could have gone. Hi Christian, welcome to the show.
Hi Gina, hello. Thank you very much for having me.
Christian, so let's start with your journey. Because as mentioned a while ago, you're a protege of Congressman Salceda, and I was always been wondering, how did your journey begin, becoming his protege?
Well, I mean, I come from the same province, so we've known each other for quite some time. But I started my career after college with the DOF, the tax reform team. And he was, at that time, our primary sponsor. So I did a lot of briefings for him, and he was like, "You're from Albay, work for me."
Oh, wow.
So, the rest, so they say, is history.
What was your first impression, like knowing the guy?
Well, he's larger than life back in Albay, so, and he's larger than most people, not to mention. So really imposing presence, but and very humorous guy. But I came to know that behind the humor was a really deep sense of what this country needs, and you have very few people with the kind of grasp that the guy has. So I was so excited to work for him.
So has his mentorship changed the way you personally approach your own investments or finances?
Well, I think this is not common knowledge that Congressman Joey was a corporate hotshot in the 1990s. I think he was responsible for listing a lot of the companies we now know as household names in the PSEI. So the guy knows a lot about the markets. What he's taught me is that, and I will paraphrase something that I've learned from another investor. In the short run, the market is a voting machine, but in the long run, it's a weighing machine.
Oh, wow.
So the value of an investment is in the fundamentals of a company, but you can make money from momentum as well.
I like it. I like it. So what advice from him do you think every Filipino should hear, especially with money and financial security?
Well, one thing I think I've come to learn from the guy is that all finance is future. That means past performance is not necessarily an indicator of future success, and all finance is a matter of imagination. So how do you apply that to choosing the right stocks, for example? You have to believe in the imaginative vision of the company, of the management, and the results it's delivered so far. So if you like the stock, if you like the company, generally you'll probably like the stock.
Oh, wow. It's really nice to have that like segue. So we will talk about the main concern today, and let's talk about the tax side of investing.
Right.
I came about this topic because I know that there are a lot of promises when it comes to investing instruments. But, you know, knowing the right type of taxes, and you know for a fact that yesterday was something trending about these things. So, because in the Philippines, following the money always means following the taxes. So, how do you go about that?
Yeah. Well, first of all, just to demystify the value of a stock. The value of a stock is basically the amount of money it can disgorge to the investor from today until the end of its life, discounted to a certain reasonable discount rate. So how taxes interplays in that is taxes reduce the amount of money that a company can disgorge to the shareholder. So if you reduce corporate income taxes, for example, you're increasing earnings per share. And if the price to earnings, for example, stays the same, the stock price will naturally grow by as much as how much was saved
Okay.
from taxes previously paid. So taxes affect it directly.
And how would you describe the current climate for investors in the Philippines today?
Right.
I mean, easier or harder compared to the last 5 or 10 years ago?
Well, it's significantly easier because there have been a lot of financial technology developments over the years. And there are a lot of low-cost brokers now. I think there's a little bit of competition now among brokers for the retail segment. There used to be brokers didn't care about the retail segment back then because most of the volume was from institutions. But that's increasingly changing. So there's some competition for the retail sector. Therefore, some competition with the fees. It's definitely more favorable. That said, compared to our neighbors, it's still not as cheap as I would like it to be. Mutual funds are still relatively expensive. Brokerage fees, while the minimum brokerage fee has been abolished by the SEC, by the PSE, they're still relatively high compared to our neighbors. So not as good as I would like it to be compared to our neighbors, but pretty good compared to the past.
So you agree that there is there's really a cost in investment.
Right. Yeah.
And I commonly hear this to people like all in one.
Yeah.
Is it sulit?
Well, it's a mathematical issue. So you just have to add your fees, the brokerage fees. You have to add your taxes paid at the end when you sell. It's a math problem. So I can't really say if it's sulit because I haven't compared them side by side. But there are cheaper brokerage offerings these days. They even have loyalty programs now. And so there are many ways for the intelligent retail investor to maximize that competition.
Okay. So I like what I'm hearing when you're saying that you don't have to just like, if it's a no-brainer, go for it.
Yeah.
You have to check because a lot of things, especially on the marketing side of like things, you will see the projections.
Right.
And commonly veer away from the cost of investing. So in terms of like, let's go more about the taxes. Has the lower estate tax under the train law really helped ordinary Filipinos plan wealth transfer better?
Yeah. Well, that's a difficult question to answer because for most of the time we've had the lower estate taxes under train, we've also had estate tax amnesty. So you would really expect some upsurge of estate tax settlements from backlogs or from unsettled estates. Now, as of last month, the last iteration of the estate tax amnesty expired. So this is, I think, the first month we're seeing where the rate is 6%, but there is no longer estate tax amnesty. So we'll see this year.
For
if
regular
the
viewers,
results are-
Christian, can you talk more about this amnesty and what's the percentage?
Well, it's expired now, so they can no longer avail of it.
Yeah.
But back then, you were able to pay at the rate of 6% without surcharges. When the longer you do not settle an estate, you incur surcharges. And over time, they tend to accumulate. The estate tax amnesty allowed families to settle their estates without the surcharges.
Okay. But maybe the question is like, because the cap is higher now compared to last time, probably that's where you can weigh like I think the 6% now is capped at until 5.
No, there's no cap. There's no cap now.
Okay.
Yeah.
Okay, there's no cap now. So what's the goal behind? So let's dealt with SEPA.
Right.
So and how does it help ordinary investors?
Okay. Well, what we did with the Capital Markets Efficiency Promotion Act was to reduce a lot of the costs for investing. So dramatically, stock transaction tax was reduced from 0.6% to 0.1%.
I love that.
There are some brokers, for example, if you'll notice for our viewers, they deduct the cost that you will incur upon sale in your profit or loss. So sometimes there's an outright 1.19% deduction immediately after buying a stock. They should notice that after the SEPA was enacted, it went down to, I think, just 0.69%.
Oh, yes.
So that's a significant That's
It
a
is.
significant reduction. My theory of investing in the Philippines is it's not only the entry that's a problem, it's also the exit, yung ipit.
Okay, yes.
If your policy as an institution, for example, or even as an ordinary investor, is not to lose any money, but you no longer believe in the thesis, it takes you some time to liquidate the asset because you're behind.
Yes. Do
But-
you believe in that? Like,
Yeah.
like to maintain paper loss or cut losses?
I think it's baked into the policies of some investment houses. So there's nothing we can do about that. But my point is that when we reduce the fees and the taxes, the capital markets theoretically should be more liquid.
Agree.
Yeah, because now it's easier to sell. You incur a smaller loss from entering, and you can do more high frequency trading.
They're given more opportunity to
Yeah, so it's easier to buy, it's easier to sell.
So for the viewers who might be hearing this for the first time, can you explain in simple terms what does SEPA actually change about how we investors trade stocks?
Yeah. Well, regarding the stock market, there are three key components to SEPA. One is the stock reduction in the stock transaction tax. The second is there is an expanded definition of securities. We used to think of securities before as just shares of stock. Now the definition of securities in the amendments to the tax code are broad enough to accommodate at some point short selling, derivatives trading, commodities, when the market begins to mature. So over time, we're going to see more options in the market. Now the third component is, and this is what I hope will be discussed in roadshows more, we expanded the incentives for employers who contribute to the PERA accounts of their employees by a 50% additional deduction. So if you contributed 1,000 to your employees' PERA account, you get to deduct 1,500 from your taxable income.
That's a good motivation.
Yes, exactly. And for the longest time, there were like around 5,000, 6,000 accounts only. Of 110 million people, there are only 6,000 PERA accounts.
I was about to ask that. Like, why, despite of the reforms, why is PERA still not widely used?
Well, we'll see if this reform improves it. But for the longest time, there wasn't an employer counterpart incentive. It was only 5%, I think, deduction on the taxable income of the employee. But that's not a lot. And in the first place, if you're an employee and you're contributing to PERA, the tax incentive isn't even your main motivation. It's just a sweetener. This is more than a sweetener. So we'll see, but we're convinced it will move the needle.
So again, if a regular Filipino is watching and unfamiliar with this, and I think they would really benefit from it,
Yeah.
can you explain what PERA law is and why is that created in the first place?
Yeah, well, we wanted to bring home some of the dollars of our OFWs when we were doing PERA law, the original, I think it's 2008 to 2009. We wanted to bring home some of the dollars. You have to remember this was the global financial crisis. So we wanted to bring home some dollars. We wanted Filipinos to start saving for their retirement because the SSS is not enough. Unfortunately, after more than a decade, we've only attracted around 5,000 or 6,000
Grabe, no?
PERA accounts. That's because there is no employer contribution. Now, in most pension systems in the world, in most pay-as-you-go
The
pension
401ks.
systems, the IRA,
Yeah, the IRA.
there is an employer incentive.
I see.
There is an employer incentive under the SEPA.
So do you think that's the gap that we need to close in order for us to have an encouragement to push PERA law?
Well, part of it is that because it has to make sense mathematically
Yeah.
for an employer to contribute. But I think part of it is also because the employee has to initiate this process in the first place, right? I think part of it is also most Filipinos feel a little scared when they hear the word investing because of the proliferation of scams. We're a low-trust investing society yet.
But how come, this is super segue to what we're talking about, but since you told me that, but how come there are still a lot of Filipinos have been victimized by these scams?
Yeah, right.
That's-
Well, we don't teach it at school.
Yeah.
That's one. Finance logic is not taught in school. It's pretty simple if you can teach it at the most basic way, but we don't teach it in school. So that's number one. Number two, I think we don't have this is more of a culture problem, and I can be wrong, but I don't think we have an entrepreneurial society. So the logic of business does not make sense to most Filipinos. And if the logic of business makes sense to you, then the logic of investment will also make sense. That's the only way to understand how investing works.
Yeah, and I also, I subscribe to what you're saying, because I was talking to I think one of the interviews I had before, that our culture was, we were colonized by 100 years. And we were not trained, our mind is not like the Chinoys that we know that knows how to build legacy. So that's one that we are challenged to create right now. So thank you for that, Christian. And we're just warming up. Follow the Money returns after a short break. You're still watching Follow the Money. Still with us is Christian D, Executive Director of Salceda Research, as we talk about how mentorship, tax policy, and hidden costs shape the way Filipinos invest and grow their money. So, Christian, we're going to deal with cost of investing, and this is a very intriguing topic. I might say that, but because cost is not just about taxes, let's follow the money into hidden charges, fees, and costs that shape Filipinos invest. So aside from taxes, what are the other costs should Filipinos watch out for?
Okay, well, fortunately, these are not usually hidden fees anyway. They're just in the fine print. I guess they're obscured in a way. But look, the way to think of a fee is it is in exchange for a service. So for example, most Filipinos do not have the time to do research. So you pay for some sort of management fee so that they do the research for you, they do the transacting. But you have to judge the fee structure with the results that they deliver, because it is a payment for a service. Are they giving you good service? So there are some mutual funds, there are some investment instruments that charge a high fee for high returns. There are some that charge for high fees for low returns. The math is usually in some summary table that brokers offer.
Fun fact sheet.
So some research is, this is generally how I'd like to put it. Filipinos rarely lose money on their houses because they do a lot of research. They go to the site, they ask the neighbors, bahain ba dito, and all of that. Just a portion of that diligence on investing in securities, in investments, would really benefit our
That's the word, diligence, due diligence. Right. Like, I want to ask you about, like, when you're investing directly in stocks versus mutual funds and UITFs, when it comes to costs and the difference of it. Can you tell us more about it?
Okay. Normally, in VUL, for example, normally it's like 2.5, 3% of total assets. And that tends to accumulate over time. But there is some sort of an insurance that's attached to the product, right? UITFs around 1.5 to 2%. Index funds, the lowest I think is 1%. For stocks now, because of the lowering of the STT, it's now 0.69 at the highest. So it's cheaper now to choose an individual stock than to go for funds. That said, you might go wrong in choosing the stock. So you have to weigh those things carefully. You have to weigh those options carefully. But ultimately, the fee is something charged in exchange for a service. So if you're getting the service that is high returns, then the fees are justified. If you're not getting the returns, and I don't know if you're aware of this, but like there's this bet that Warren Buffett made that can fund managers exceed the S&P 500 over time.
Yeah.
And they made a bet, and basically Warren Buffett won the bet. He was like, the S&P 500 cannot be exceeded by professional managers. In the Philippines, that might not be the case, looking at the PSEI.
Yeah.
But again, due diligence, people have to look at what they're investing in. The fee has to be justified by the quality of service.
And I would have to say, when it comes to brokerage, wherein you're directly investing the stock, is research very important.
Yeah. You have to know more than the rest of the market with a certain stock. In other words, everybody can be some sort of insider in a way. You're a nurse. There's some product that you like, a medicine that's been introduced in the market that nobody else knows about, but you know it's working. You have inside information. That's when you're choosing a stock, you're stock picking. you have to have an edge over the rest of the market in order to yield above market returns. Otherwise, you're just going to be, you're going to get average returns otherwise.
I like that, like insider of being in your profession.
Yeah.
Yeah, it's legal.
Yeah, yeah.
And is that how Peter Lynch also was doing it?
Yes, yes, yes.
So which investment would cost, would you call high cost versus low cost?
Well,
For ordinary investors, let's say, for example.
this was long overdue, but REITs are very cheap. REITs are very cheap
Because
investments.
you can get in on the stock platform.
And look, it's very expensive to own real property outright. You need a huge amount of cash.
It's not liquid.
It's not liquid. You have to keep maintaining it. Upkeep is expensive. There are hidden fees, condominium dues, etc. With a REIT, everything's managed for you. And normally, it's very easy to value. In the Philippines, with the kind of, with the kind of population density that we have, real estate is a very safe bet. And the REIT is the safest kind of bet on a real estate.
So, for example, you have
investment.
50,000 pesos.
Yeah.
How would you like minimize the cost in that kind of capital that you have?
Well, that depends really on the kind of risk that you're willing to take and the kind of attachment you have to your 50,000. So if you're very attached to your 50,000 and you're a low risk appetite investor, I would say that you can invest half of it in some high dividend stock or a REIT. And you can invest the other half on a stock that has some runway to grow, but has solid fundamentals. You know, I come from a small town, and in my town, if you have two businesses, or if you have a rental property and a business, say a bakery or something, you're considered well diversified already. So 2, for me, is already pretty well diversified. However, if you're not that attached to the 50,000, you know, I'm a young guy, I can make that in the future, then you can do riskier bets. Some would even say you go towards crypto. I don't subscribe to it necessarily, but
Nothing wrong to
yeah, but take
your
it depends on
grain
your
of salt.
it depends on your investment appetite.
Yeah. So thanks, Christian. Now we will do a rapid fire question round. So this is no explanation needed. So for short answer, stocks or mutual funds?
Stocks.
Real estate, costly or cost efficient?
Go for REITs.
Okay. Crypto fees, overhyped or worth it?
Worth it in the past, not sure in the future.
Okay. VUL, investment or stocks?
Expense. It's an expense.
Okay.
Yeah.
Digital apps, cutting cost or adding hidden fees?
Cutting costs.
Okay. Foreign investing, worth the cost or better to stay local?
Some diversification is some exposure.
Okay. Hidden fees everywhere or avoidable?
You can avoid them.
If you could sum up Congressman Salceda's economic philosophy in one sentence, what would it be?
I don't know if he'll agree with me, but I think I'll summarize it as capacity. It's always build capacity to grow, to withstand crises, to rebuild, always capacity.
One piece of advice every Filipino investor should know about cost.
Spend half as much time as you would spend on buying a house or trying to figure out whether a house is worth it. Just half.
All right.
You'll do well.
So one word that Congressman Salceda has taught you very well.
Imagination.
Wow. So this is a traditional question to this show. Money is the root of all blank.
Money is, I guess, the root of all human action, in a way, in modern society.
All right. I need to ask this before I let you go. There was an ongoing tweets yesterday, a lot of fake news about this 20% passive income. Can you comment on this and explain our viewers to keep them educated?
Just 2 things. No? First of all, a tax reform is always a package of different things. And it was presented as just this one single item. So that's unfair because we reduced a lot of taxes in other places and we've made it easier to invest in securities. Number 2, largely overblown. Only around 200 to 300,000 Filipinos own some sort of long-term deposit that was imposed a new tax. The rest of the 69 or 70 million or so Filipinos are not affected by this. So, quite unfair, the framing. if you have a long-term deposit that's more than 5 years, then you'd be affected. But most Filipinos, I think more than 90% of Filipinos.
So you
do
mean
not have
digital banks are not affected?
No,
It's
no.
it's a time deposit that's are
that. Time deposit above 5 years.
above 5 years.
So even most time deposits are not affected. Like they were charged 20, they're still charged 20.
Thank you for that clarification. And Christian, thank you. Christian, the Executive Director of Salceda Research, for sharing your insights, your thoughts on mentorship, tax policy, and hidden costs of investing helped us understand how Filipinos can make smarter financial decisions. Thank you, Christian.
Thank you.
Being deliberate matters in investing. Diversification is wise. As American billionaire and hedge fund manager Ray Dalio puts it, maintain 15 uncorrelated risk-balanced return streams to mitigate risk by 80%. Build an all-weather portfolio. From taxes shaping our investment choices to hidden fees lurking behind convenience, today reminded us that the true cost of investing is often far beyond what's printed on a brochure or flashed on a screen. To our viewers, remember this: be vigilant when you look at investment offers. Don't be dazzled or confused by projections alone, because those are never guaranteed. Be wise about true costs, not just ease of getting in. Over time, those small costs might grow so large that they become tantamount to a whole new investment you never planned for. Because at the end of the day, it's not only where your money goes, but also about where it could have gone. I'm China Barachina. Stay curious, stay sharp, and always follow the money.